So today I'm going to share a secret pattern that can help in identifying the market reversal. So this pattern can predict reversal in advance and can help you in planning entry and exit in advance, giving you an edge in your trading strategy. The candlestick pattern that we are talking about today is a pin bar candlestick pattern. So let's first talk about what is pin bar. So a pin bar is a reversal pattern where the candlestick like a small body like this one and a long wick, like we can call it tail or the wick. So now I'll give you more examples. So all these are pin bar candles, or let's say pin bar, yeah, candles, right? This is a pin bar candle, this is also a pin bar candle, this is also a pin bar candle. So all those candles which has a long wick and a body is a pin bar candle. Now there are two types of pin bars. One is a bullish and one is a bearish one. Okay, so now let's talk about bullish. So in the bullish pin bar, like we said earlier, we have a small wick, long wick and a body. So this is one of the candle, and then we have another one with the body and a long pin bar or wick, but it do not have a small pin over here, or let's say a wick over here if you do not see it. So these are like two types of, or let's say the another type of candle. Then we have a red one again with a small wick and a long wick and then a body, and then we have the red body and a long wick. So what does it mean? See, if you notice over here, we have almost all, we have the similar candles but with a different color, and that is also within the bullish market. So what it means to say is the color doesn't matter in the pin bar. It's the body and the wick which matters the most. And this is similar for the bearish candles as well. So bearish pin bar, we have a small wick, long wick, and then a body, and then again we have a small body and a long wick. I will also come on to the logic how this is created. Now here also we have a long body, a normal wick and a small wick. Now again in the bearish market or bearish scenario, we don't need to be bothered about the color. So either it can either have red or it can have the green candles. Now let's talk about the logic how this is built. Now let's say in the morning 9:15 a.m. this candle is created, which is a small candle or normal candle, let's say. And then after some time the sellers came in and sellers started to sell the stock, or let's say quantity, and a long red candle got created. Now this is the first step of a candle, first step, and this is the second step. Now in the third step again the sellers are equal to the buyers, wherein the candle got a little bit small, or let's say the body got small. Now we have equal number of sellers and buyers, and after that the sellers got less than the buyers. Here the buyers are more than the sellers, so that's why the wick got a bit more smaller, or the body got a bit more smaller. Last but not the least, now we have only the body and a long wick. So here in this case the buyer is more than the seller, or let's say we have only buyers over here, there is no seller, so the sellers just vanished. So this is how a single candle is created. So the candle started from a small candle with a normal wick, and then it ended with only a body and a wick. So this can be the scenario in either the bearish market or bullish market. Like I said earlier, the color don't matter in this scenario or in this case. Now let's talk about the common mistake that a beginner does as soon as the beginner sees a pin bar. So this is a pin bar, so this is a pin bar. So pin bar has a small wick, and let's say we have a small wick over here, then we have a long wick, and then we have a small body. Now what normally a beginner does, as soon as he sees the small wick over here and the small body, he will sell it. Why? Because here if you see, the sellers are more than the buyers. Of course, I mean the market is going down now, and then what will do, he will start shorting, and that's the biggest mistake that he's gonna do. Why? Because as soon as, so this was the candle that we were talking. Now here the market got reversed, and this is like a big, what we say, the market got reversal, and then whatever the stop loss he had maintained, he must have maintained somewhere over here. So stop loss must have hit, and then it must have gone like the opposite direction. And this is what the normally a beginner does. As soon as he sees that the seller is greater than the buyer, he will just short it. Now again the seller can do something similar over here. So irrespective of, let's say, the resistance and the support, what he will do, as soon as he sees that the seller here, let's say here also if I talk about this particular candle, here the seller is greater than buyers number of sellers. Now what he will do, he will just short it and then he will expect the market will go down, but the market goes the other way. Why? Because there is a specific reason for that. Now this is a similar case over here as well, even though the seller is equal to almost the buyer, but the case is a bit different. The reason being, we have a resistance and we have a support here, and normally the trader, let's say a beginner, do not care much about the support and resistance, and that's the biggest mistake he or she can do. The reason being, if you see, here is a major resistance, here we have major resistance, here we have resistance, here we have resistance. So all these are major resistance, and this is a support, support and support. And with the pin bar, the major, or let's say the most important thing is, if there is a pin bar near to the resistance or the support, the market almost all the time reverses. And this is really important. I will come on to the specificities in next couple of minutes, but make sure that whenever your candles, or let's say the pin bars, are near to the support or the resistance, you should always expect a reversal in the market, or let's say for that particular quantity or the stock. Now let's talk about, see earlier, now I will give you an example how we should take the trade whenever we see a pin bar. Okay, so let's say this is a normal chart and you might not see a big buy or sell positions in this chart. I will show you what this basically chart can do. So we have a support, a resistance over here. So this is a resistance. Why? Because we have touch over here, over here. So at all these points, the stock is going the other way. So these all are resistance, and then we have support over here. So we have support, 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 and of course the support. Now we have one more pattern which is being created, or let's say we have another support over here, we have support over here, and then again we have a support over here. Now whenever you see there is a support, like I said earlier or mentioned earlier, whenever you see a resistance and the support, and then if you see a pin bar, for example, let's say this one, let me clear this out, eraser. So I'll show you this one, even this one. Let's say we have this one. What else? Okay, so this is enough. So whenever you see a resistance and a pin bar, for example this one, this is a pin bar. So we have a long wick, small wick, and a body. So always expect a reversal if this pin bar is near to the support or the resistance, and this is the rule for taking the trade. Now again, let's say when you should take actual trade, there are like couple of reasons. First, follow the pin bar, first one. Second one, it should always be near to the resistance or the support. Third one, always look for, let's say, a confluence strategy. So confluence strategy is basically when you have more than one reason to trade. Okay, so you have support, resistance, you have pin bar, then you have another support over here, and then last but not the least, market trend. So if you see, we have down, up, down, up, down, up, down, up, down, up. So this is a trend. This is a proper trend that you can find in a stock. So whenever there is a market trend, or let's say in equity, you can take the trade. And then if you see over here, we have a small wick, we have a small body and a long wick, and see how the market went up. Why? Because it got created on the support level. Now you will ask, where should you take the stop loss? Normally the stop loss can be taken over here. So this could be your stop loss. And if I take the case of the other one, even again, you can take this location or this closing price as a stop loss. And then similarly, you can see over here, this can be your stop loss if you are taking the trade from the resistance part. So I hope you have understood. You have to take care of all these. You have to take care that you meet all these criteria while taking the trade. Now I will also take you to the Python code, maybe in another video, because this is already a long video now. So till then, take care, goodbye, have a great day. Make sure to like, share and subscribe. Eat healthy and drink plenty of water. Till then, take care.